Market Gauge. Mish, good morning. Thanks as always for joining us today. Now, it's a pretty packed week in terms of data, economic data coming out. We are expecting the US GDP growth rate for the first quarter as well as inflation data coming out on Wednesday. What are you expecting from these two data points? What are markets anticipating?
Well, first of all, hi, thank you for having me on. Well, essentially, it's going to be all about the number versus the expectation, and then, of course, what people expect going forward. So if we start with the GDP, there is an expectation based on a lot of data that has come out recently that we could be experiencing a pretty significant slowdown. And so that 2.4, 2.5% is what people are looking at right now. That's the people who are looking at it as the glass half empty, that this is leading towards recessionary numbers. But if you look at it at the glass half full, one could say that that's still relatively impressive considering how much is going on, that there's still growth at all. So I think you have to take these numbers with a grain of salt, always. I mean, we always do anyway, because we know that numbers don't always necessarily reflect the present and certainly not the future. With the PCE, same kind of thing. Right now, the expectations at about 2.2%. We know the Fed looks at under 2% as their target for inflation. So although it's much better, it's still high enough where most likely the Fed might do nothing as a response to that. So, there's going to be, everyone's going to look forward again to next week about the unemployment numbers. The job openings, they were very low. We are seeing all kinds of issues with the volumes in the ports, the prices of things going up. So I would rather focus on what the market sentiment is right now.
I think we've seen a slew of consumer earnings overnight, Mish. We saw Visa, we saw Coca-Cola, we saw Starbucks, which all give an indication of what the health of the U.S. consumer is or what their thought process is like. What's your takeaway from these results?
And there again, I mean, so if we're talking about market sentiment, you have to look at the consumer. I think right now that's probably the most important sector, not only in the market, but obviously in the U.S. economy. So it's very mixed. Coca-Cola reported better than expected. They're saying the tariffs are manageable and that they're saying that even though there may be some increased costs for the consumer is still relatively healthy. Pepsi didn't do as great, but again, they're more worried about the cost of the consumer and the tariffs. Visa was another one that reported. They talked about the fact that their tariffs are looming, but they had good profit and they still see the consumer out there spending. So I think what we're seeing is the consumer that's picking and choosing where it wants to spend with a couple of benefits, lower oil prices. And since the yields came down, even though the Fed policy hasn't moved, there is some expectation that the rates will go lower. So the consumer's cautious, but they're not panicking just yet.
So there is some resilience with regards to these consumer-facing giant companies, but are there some, I guess, under the radar type consumer or retail stocks that you might be watching that we should be paying attention to?
Yeah, I've been watching, one of the things that I think is really interesting, there was a big announcement today between Hims and Hers, which is the company that delivers pharmaceuticals and other type things to people, and Novo Nordisk with Wegovy, that they joined together and Hims stock rallied. But really that's a bigger backdrop of the impact of the diet drugs on the consumer. And we're starting to see that take impact in even some stocks like Urban Outfitters, for example. And if we're looking at not so much the luxury brands, but Kroger, which is more where people would shop for bargains on food. The consumer is spending money even on Ulta. Beauty is another one. That stock has done very well in the face of a lot of recession talk. So I think you have to look around at what impact would consumers go out and spend money regardless if all of a sudden they have a new thin body, for one. And number two is as sort of a recession-proof type of thing. I feel miserable, but I want to spend money on making myself feel better. Am I going to go out and buy a Louis Vuitton purse? No, but I might go over to Target and pick up something, you know? So I think that's how we're seeing the consumer right now. And again, I think health and beauty are two areas that will hold up better.
Would this be also part of a function of the allegations that luxury brands like Hermes, Chanel, and Louis Vuitton has been facing with regards to their manufacturing practices?
I think there's definitely always a bit of a social consciousness when it comes to these things, although we certainly know that this current environment is not so much about the social consciousness, it's more about the cost. There was a lot of overvalue in a lot of those stocks in the luxury brands. And of course, we have to say the trade war can't be helping them very much either. And so this is all why right now that, and of course that people may not have a lot of discretionary money, but they're not necessarily broke. That's what's going to impact those luxury brands for now.
Mish, the dollar index has been staying just below 100 for the past 2 weeks. What is the outlook for the US dollar?
Well, that's another one. I mean, it's been obviously a big downtrend, and you can see that the herd mentality is once it broke down under 100, that's it. It's going to crash. Everybody's selling our dollars. You know, run for your lives in the U.S. No longer the world's reserve currency, and now it's popped. So the way it looks to me right now is if we take out 100, we got really close, as you just said, we could see 103, 104. Do I think that the dollar is going to be supreme again under current environment? No. Do I think we could still be in a downtrend? Yes. But I don't think it's quite as hysterical as one would have you think listening to the media.
But then how would you interpret the situation where we see a rebound in both U.S. equities and treasuries, but the U.S. dollar is still pretty weak? What's the situation there?
Well, the purchasing power of the dollar over the last 40, 50 years has really gone down. I think basically what's happening with the dollar versus, what's happening with the bonds, the bonds are still relatively weak. What we've seen is a flight into the bonds in anticipation, like I said, that maybe the Fed was going to lower rates. I think that's really where that comes from. People are convinced we're in a recession, the Fed's going to come in and save us, and the dollar got hit as a result of that. And again, a lot of fear about foreign sellers in both the treasuries and the dollar. But we don't really know how that's going to play out yet. So my guess is that with this recent rally we've had in TLTs, which is the long bonds, and the yields coming off and the dollar popping a little bit, is more towards a normalization or at least some level of optimism that the worst might be behind us as far as tariffs. And certainly you're hearing a lot of talk from the admin. Don't worry, don't worry, don't worry. We're going to make deals. These tariffs are going to reduce your taxes. Everybody loves to hear that. So yeah, right now we're hopeful again, and we're a very hopeful people. So I'm not surprised.
Mish, do you think that headlines that the first 100 days of President Trump has seen the worst stock markets fall since President Gerald Ford, are those the kinds of headlines that will actually move the Trump administration to maybe course correct on some of their policies?
I think that's a very good question. We know that he likes to be popular. Some of the things that he has said, though, has been completely the antithesis of popularity, like there will be pain, get ready for it. But you have to think that his very wealthy constituents who have seen their portfolios go down or long bonds and have gotten killed there, or long in China, which was a big, big play for a lot of investors, have gotten hurt there, are putting pressure on him. So, yeah, I would think he'd pay attention.
Mish, thanks as always for speaking with us. That was Mish Schneider, Chief Strategist at Market Gauge, giving us her take on some of the trends that we could see moving markets in the days and weeks ahead.